You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 17th day of October 2018. Fed announcement, our Fed minutes this afternoon, the minutes of the announcement. Looking for some wild volatility this week, I said earlier in the week, but there hasn't really been anything to spur it on so much. But the week's not over, is it? Was it last Wednesday that whole thing kicked in gear? So, not prophesying, just saying. Just saying, welcome to the show. Glad you've joined us today, whoever you are, wherever you are. It means a lot. Glad you're here. Can you see my chart? If you can't see my chart, go to the home page at cfrn.net. On the right-hand side of the page, big microphone. Click it, follow the instructions. You'll be registered in about 30 seconds, and you'll be good through the end of the month. One-click access every day. You only register once per month, but you do have to register once per month. Okay? First of the month is your best deal. 30 seconds for 30 days. One-click access. Also, be sure and bookmark the page youtube.com/CFRN/live. This way, if there's ever an issue with the go-to software, should it go down, you'll know where to go to. That's right. Beat feet over to youtube.com/CFRN/live, and you'll do it with one click. We're real big on the one click. If you're returning, welcome back. If you're here today for the very first time, a special welcome to you. We have provided a chat box for your convenience. If you have any questions about who we are, what we do, why we do it, how long we've been doing it, or my mother's maiden name, I mean, just type it into the chat box. That's all you got to do. No one sees what you type except for myself, my partner Michael, and Bert, our broker, if he happens to pop in. Okay, that's it. So your secrets are pretty safe. You got a question, ask it. That is the best way to get an answer. It is. I know. I've tried. Here's a little bit of news for you. Caspian. Does that ring a bell? Caspian has revealed the company's flagship trading platform is out of beta, and over a dozen institutional investors are already using the service. Caspian has been making partnerships in order to become the all-in-one Swiss Army platform with access to multiple exchanges. Back in May, the firm teamed up with the Bitcoin Mercantile Exchange, also known as BitMEX, and last September, the company partnered with Coinbase. According to Caspian's creators, the company's mission is to bring comprehensive trading tools to players in the legacy financial system. They're going after Wall Street. Institutional investors need resources similar to those they are using to manage traditional assets, systems that manage portfolios, orders, risk management. It's going to be fascinating to see what happens to the crypto market when institutional investors move in by the hundreds, which is what Caspian thinks is about to happen. Caspian says it now provides over 25 exchanges via a single interface. This includes all your well-known platforms such as Binance, Poloniex, Bittrex, Bitstamp, Fisco, CME Group, ItBit, and more. During the latest onboarding process, Caspian says the clientele using the system are companies such as Travis Kling's Asset Management, Like Limited, and Bletchley Park, all household names. The news follows the very large financial firm Fidelity Investments, which we talked about Fidelity yesterday, launching their own institutional grade cryptocurrency management platform. Fidelity explains the company will provide enterprise quality custody and trade execution services for all your digital assets. At Caspian, they believe institutional investors need two things: an institutional level custodial solution that Fidelity brings to the table, and secondly, intuitive and user-friendly software platforms like Caspian brings to the table for proper management of the assets. I think Caspian is one to keep your eye on. And you might want to keep an eye out on the App Store. Now, the Apple App Store has often been referred to as a walled garden. Try getting an app approved for the App Store. Now, anybody can put practically anything on Android in the Google Play Store. They've cracked down a little bit of late, but for a long time it was just wild, wild west. If the code works, you can put it in the store. It's never been that way with Apple. They've always had very stringent quality control protocols that they follow. Only apps that Apple approves that meet the test can be downloaded for your iPhone, which Apple has always said improves security and satisfaction. You know, bugs have run amok in the Android system, but yeah, not so much in iOS. But there have been some apps on the Apple App Store that have taken advantage of customers using what techies call dark patterns. Now, this could be you, so listen up. Or misleading user interfaces designed to trick people into selecting options that they didn't mean to select. In this case, those dark patterns were designed to get people to sign up for subscriptions that could cost hundreds of dollars per year. For example, number 69, that is the 69th top grossing app in the United States App Store. And by the way, in case you didn't know, iTunes, there's a US iTunes store and one for Australia and one for, why do they break them up that way? Why is it all just one big free-for-all? I mean, it is the internet. We are connected. It is a global village, yeah? Well, I don't know, but that's how it works. The 69th top grossing app in the United States App Store was called Scanner App. Sounds pretty innocuous, right? It used your iPhone's camera to scan documents, and it worked. But it cost as much as $4 per week, which turns into over $200 per year, and wasn't honest about signing people up for the recurring bill according to reviews. I have one of those scanner apps on mine. I don't know if it's that particular one. I'll have to check and see. And now it's zapped off the App Store entirely. TechCrunch broke the story, along with some of the other apps that were doing the same thing. These shady subscription apps are enabled by a change Apple made in late 2016, which allowed different kinds of apps to charge a recurring subscription fee instead of a one-time upfront cost. To make matters worse, some subscription apps have started using Apple's App Store search advertisements to gain placement above less expensive alternatives when users search. Now, you might not have known that. When you go to the App Store, the featured apps, they're not featured because they're like the editor's pick, which if you look below, you'll find that too. Featured means we paid to be here. Doesn't mean we're popular. Doesn't even mean we're particularly a good app. In fact, we could be a shady app, but we paid to be here when you open the App Store. Apple has been aggressively pitching subscription fees to its top developers, including releasing a video evangelizing the subscription model earlier this year and holding invite-only meetings in New York to encourage developers to try selling software on a subscription basis. At one meeting in early 2017, an Apple representative said that paid apps represent 15% of total app sales and is on the decline, suggesting to developers that subscription apps are the only way to create a sustainable business on Apple's platforms. TechCrunch was not the only outlet to publish a story about this particular scam. Forbes shined a light on it earlier in the year, and in summer of 2017, Mashable reported on a virtual private network app that charged users $99 per week. When asked for comment about all this, Apple, oh, they didn't answer the phone, so no response. Now, in order to use the App Store, you must have a credit card on file. That's where the charges would come, and so if you think there could be any chance whatsoever that you got caught up with one of these types of apps, check your bill. Check your bill. Okay, that's it for our little bit of news for the moment. let's take a look at the numbers, and then we'll go to Michael and get a recap of the live training room. And I think we'll talk to John today. Let's see what we've got. In the U.S., these are cash markets now. We'll get to the futures momentarily. The Dow is up 8 points. The NASDAQ is down a point. S&P 500 up 3. Russell 2000 down 13. No big moves, no wild swings, just the market rolling sideways. Crude oil inventory day down $2.01. That's almost 3%, trading 69.91 last. Gold down 40 cents, trading 12.30.60 last. Now it's a bit of a different story in the Asian markets. The Nikkei closed the session up 292 points. It's over 1%. Shanghai added 15 points, and the Hang Seng added 17. That's a pretty small number for the Hang Seng, but it is green. And last but not least, in the European markets, the FTSE closed the session down 5 points. The DAX was down 62, and the CAC was down 28. So Asia green, Europe red, and here at home, weebles wobble, and I don't know if they're going to fall down or not. But whether the numbers are red or green, they're all small, with the exception of the Russell, which is actually down 12.5 points, and that's 0.75%. So there you have it. A little bit of news, numbers from around the world, and now here's Michael.
And here I am.
And look at where price is.
Where is price? Right there. That's a nice spot right there.
Last week's lowest weekly trading zone. I commented on this in the channel last night. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. When I posted it, there were 17 30-minute candles in a row. That's 8.5 hours, I believe.
Mm-hmm.
Yeah.
Yep.
8.5 hours just rolling. You know, let's see, was there any volume in that sideways roll? I didn't look at that. Not that it matters a whole lot, but let's just see. Okay, now you see that little green thing, you'd say, well, okay, nothing happened. Yeah, something happened. Let's see what happened. Okay, in that 30-minute candle, that little flat, tiny candle, almost 2,000 contracts traded hands. Next candle, 2,000. Next candle, almost 5,000. Next candle, 4,000. So there was volume, but not a lot of movement. Little pop, and guess what our final target was on this move right here, Michael?
Let me move that out of the way. Your final target on that move, I would say, would probably be 28.17, 28.16 area.
28.24.
28.24. Oh, okay. I'm sorry. You were going up, not down. I'm sorry, I was looking
it spiked us by a tick, but yeah, that was
nice.
That was just fortunate. So
Nice.
sometimes good things do happen to good people. And that makes me a little warm and fuzzy. So, did you take the charts up?
I did not.
Oh, okay. So that's why I don't have that thing. So
There. Now I have the charts.
Now I'm not going to do a spoiler alert for anyone that hasn't watched it, but to show the Connors, you know, Sans Roseanne had its debut last night.
Mm-hmm.
Did you by chance watch it?
I did not.
Have you by chance heard about it?
I have not. Was it good?
Well, I actually didn't see it. I do plan to watch it, although there's not much point now since I read that article this morning. Maybe there should be a law against that. I don't know. Anyway, I had a feeling that might be how they handled her no longer being on the show, and so I'm not going to go any further than that. I'm just going to tell everybody that if you ever watched Roseanne, if you enjoyed the program, the family, the dynamic, you cannot not watch what happened last night in TV time last night. Yeah, and then tomorrow, after everybody's had an opportunity, to track it down somewhere and watch it, we'll discuss it openly and bring some tissue. All right, let me put your chart up.
All right.
Elon's bragging about how he's going to buy $20 million of Tesla. He got out of that last scrape by the hair of his chinny chin.
Yes.
And who was it? Branson, I think, called him up and said, "You need to calm down." He said it a little more politely than that, but I think that's what it amounted to. One billionaire advising another.
Wow.
Second largest U.S. lottery prize ever. Mega Millions, $868 million.
Yes.
Do they have that where you're at? Mega Millions?
Yes, they do. They do, in fact. They do.
Now, Crude really, we'll talk about, well, you'll go through your thing, then when I come back, we'll talk about Crude, because there was inventory numbers today and a big reaction. And then this afternoon, I don't know what's going to be in those minutes, because, you see, here's my thinking. They had the Fed, and then after the Fed meeting, President Trump came out and blamed the market decline on the Fed. Except the Fed didn't do anything that people didn't expect, correct? What did they do at the last meeting? Did they raise or did they stay flat?
I think they stayed flat, didn't they?
Okay. So anyway,
I don't remember.
I got a feeling that Trump maybe knows something that the rest of us, mere mortals, don't yet know. Because I couldn't understand why out of the blue, the market takes a dive, and out of the blue he just goes, well, that's the Fed's fault. Okay. What did the Fed do today or yesterday? So when those minutes come out today, if there's some language that is surprising or worrisome and puts the markets on tilt, just be prepared, that's all. I mean, I'm not saying that will happen. I'm just cautioning and urging everyone to be prepared. And that's at 2 o'clock, right?
Yes, it is.
2 p.m. Eastern. Okay, I'll hit mute and endeavor to be right here when you're done.
Okay. All right. I will get into this. And let me just check in here and see what's going on. Hey, Sam. Okay. All right. Good afternoon, everyone. Today is Wednesday, the 17th day of October, 2018. If you have not taken a free trial with us, go to the home page at CFRN.net. And right over here in the right-hand column, it says 5-day free trial. Apply.CFRN.net. You can click on that or any of these other buttons down here that will get you to the free trial. And eventually that is going to bring you to this page right here. That is going to bring you to this page right here, where all we ask for is your email, your first name, and how you found us. Click on the submit button. When you click the submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, you don't get a free trial because we don't know that you wanted it. All right. All right. Today, as I said, is the 17th day of October 2018. If you're going to read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today we made 9 ticks in the euro, 7 ticks in crude, 5 ticks in gold, and 4 ticks in the ES to put us at 226.75 on the morning. Today it took 33 minutes and 5 trades to get to the goal for the day. At that point, We were up $116, and we took a total of 10 trade opportunities today. And I'll get into all those in just a few minutes. All right. Now on the month, we're up 3,116. That's over 13 days, averaging 239 per day. On the year now, we're at 28,516. That's over 192 days, averaging 148 per day. Okay, 148 per day. All right, so let's get into it. On the gold, let's see. We started out here and we didn't have anything that we could do right through here because we weren't really trending. Then it started to move ever so slowly, and we got one trade opportunity right here that we were able to take advantage of. We got 5 ticks profit on that. Okay, then it got in here, and it dropped like a stone right here, but there was nothing we could do there. There was a shorting opportunity right here that would have been a break even. Way over here, it would have been a break even, but I missed it. And then at the end of the session, it was just really choppy and sideways. It's starting to pull back right now, testing the BBC. We have bearish divergence and a red cycle and a red MA1. So a down close here would be a very high probability trade. Even though this level right here seems to be pretty solid buying level. You know, it's been hit 3 times now. We ended with +5 on the gold. Okay. Euro, we started out here, we got 1 tick there, and then it was just really choppy for the first hour. Well, the first hour and a half. And then finally it started to move, and we took a short right in here, and we picked up 8 ticks on that. That put us at +9 on the morning for the euro. And then it got really choppy. It made 1 move at the end, but then it just stopped moving. That was it. The euro was... I mean, the markets weren't really giving us a lot today. You know, the Fed meeting minutes that are coming out this afternoon, I suspect that has something to do with it. And the crude inventories that we had, I also suspect that might have had something to do with it. Now, on the crude inventories, we got a much bigger build than they were anticipating. And yesterday, the API numbers had a draw. So I was expecting a bigger draw, and we ended up getting a bigger build. You know, much bigger build, like 3 times the size of what they were expecting. But anyway, on the crude, we started out here with a break even, right? Yeah, we started out there with a break even. Then over here, we picked up 2 ticks. Okay, we missed a short there. And this was when the crude inventories came out. Okay, so we didn't do anything in here. We waited and waited and waited until way over here. And right here, we picked up 4 more to get us to +6. Okay, then in here, we picked up 6 more to get us to +12. Somewhere in there, we picked up 3 more. I don't know where it is, but we picked up 3 more. This might be the 3 more. Somewhere in here, we picked up 6 more to get us to +12. And then 3 more to get us to +15. And then we stopped out to put us back down to +7. Let's see, during the break, it was a shorting opportunity right here to grab that leg down. It flipped around and gave a long from right here that I may or may not have suggested because we're not really trending right here. If you did do it, your stop would have gone to break even. Then back over here, another short. Stop would have gone to break even. And over here, nothing. Nothing yet. Okay, and that was crude. Now the ES, we have to scroll back on. Hang on. Hang on, everybody. Okay. Well, I missed this first one right here. Well, it actually didn't miss it because it had dynamic support right there, so there was no trade. I missed this first one, though. That began this leg down. And I missed that one. I'm not sure where the zones are. But anyway, I missed that one, and I missed that one. And why did I miss them, you ask? Well, because I was doing something else. It looks like there's another one right here that went off that I missed. Then it got really choppy. And we have our zone right there. And we broke down below the zone, and we came right back up to the zone. And once we started breaking away from it again, we broke this dynamic support. We grabbed a short below that trend line. We picked up 4 ticks on it. I thought it was going to go down to the low of the day here, but it didn't. It turned around and ran right back up. And then I was waiting for it to give us a trade setup, but then the cycle went down too steep. See, during the break, it looks like there was a long opportunity from right here during the break for that leg up, and possibly another one right there for that leg up. Okay. Over here, there was a shorting opportunity right there. Oh, sorry. I just had this painful twitch. Okay, and that was it. Now the gold is testing the BBC. Has a nice red MA1 with a really steep slope, and a red cycle with a really steep slope. So that should at least get down to here. Okay. All right. And with that, we'll go back to the spreadsheet. Here you go. On the spreadsheet, you have to, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. And on the spreadsheet, we made 9 ticks in 9 ticks in the euros, 7 ticks in crude, and 5 ticks in gold. And we made 4 ticks on the ES. That put us at plus 226, 226.25, and that's over 30. I'm sorry, 226.25 on the day. Today it took 33 minutes and 5 trades to get to the goal for the day. At that point, we're up 116.50, and we took a total of 10 trade opportunities. So on a month now, we're at 3,116. That's over 13 days, averaging 239 per day. On the year now, we're at 28,516. That's over 192 days, averaging 148 per day. Okay. Now, if you have not taken the free trial, then just go to the home page at CFRN.net. Right over here, it says apply.cfrn.net in the right-hand column. You can click on that, or any one of these free trial things. You can click on it, and eventually you'll be brought to this page, where all we ask for is your email, your first name, and how you found us. Click that submit button. When you hit the submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay? You must click on the confirmation link. If you don't click the confirmation link, we don't know that you took the free trial. So make sure you go and do that. Okay? Okay, and with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A overlooking the South Mountain, America's largest city park. Dwayne, if you are ready. Excellent.
And there we are.
Yes.
Recap of the recap.
Today, it took 33 minutes and 5 trades to get to $116.25. 116.25. 5 trades. 116.25.
Awesome.
That is.
Pretty awesome. Now, this is quite interesting. What a magnet this 1617 is, because we blew through it last week unceremoniously. I think that's how they say that. What day did the fireworks start last week? Was it Wednesday?
I don't know.
I think
I don't recall.
this day, the 10th. 10th would be 7 days ago. It would be last Wednesday.
It would be last Wednesday.
And we started walking sideways at about 11:30, 12, 12:31, 1:30, 2, And it was at 2:30 that we had a trigger on something, I guess. And anyway, whether we did or not, by 2 o'clock this thing was underway. And it took us from 28, 24 down to this area. That's where we broke the 16-17 right there. And then we stayed below it for the remainder of the week, which is unusual, but it has happened before, and I'm sure it'll happen again. Then I drew this trend line, and it held us, after I drew it to here, it held us again here. And didn't even quite make it there. And then we double bottom down around 27.45. And then we caught that beautiful rally right there. Now, yesterday we waxed along about the fact that we didn't have an exit signal on this move, but that eventually we would, because let's see, how is this? All good things got to come to an end, and it's the same with the wildwood weed. Not sure if that was a song about grass or not, but remember that song, Wildwood Weed?
No.
I don't know, it's been before your time. Okay, we got to blow this up so we can see it.
Oh, John's out there. I just noticed.
Okay, all right. So we didn't have an exit, and we didn't have an exit signal, and we finally got one right here. And why is that an exit signal? Because we closed below the step line. So anyone that doesn't know how that works, now you know. Okay, is there anything else you want to add before we open up John's mic?
Not right at the moment.
Okay.
Yeah. Well, let me open it up. You can usually tell if he's ready.
Okay.
Okay. It's open.
John, welcome to the show, if you're there. John's not there, man.
John's not there.
Okay.
He's just not
well,
there.
I had rang his phone a minute ago, and so he was probably getting logged in and such. And when he didn't answer, I assumed he was on the phone. Last night on the Concierge Trade Alert. Oh, I said when I came back we were going to talk about this crude business. So what were the inventories?
The inventories? We had a build of, let me open it up. We had a build of 6.5 million, and they were expecting a build of 1.6. And the API numbers yesterday had a draw of 2.1. So I was expecting the draw, and they came out with a build, a much bigger build than anticipated.
Want to see something delicious?
Sure.
Oh, delicious, delicious. Where is that? I believe it's up here. Closing in on it. Oh, yes, I am. Okay. Consider selling crude 72.10 to 72 to 71.80 and tip. Do you always tip?
Tip.
Trail if possible.
Yes.
The weekly trading zone below for this week, 71.35/71.40. If crude happens to catch a bid, we'll pick it up on the other side. We're butting our heads right now up against a crude weekly trading zone, 25/30. Either way, we should get an opportunity out of this. And so the idea was 72.10 to 71.80, and then trail as far as you could. So 72.10 looked a little something like this when it went out. What time was that? That was at about 6:22. So that would be in the 1800 hour candle. Yeah, about right there. And about there. Somewhere during that time period. Okay, and then we wanted to 72.10. That should be right about here. Sells, that's a, yeah, sells 72.10. Now this was an L2, so I should designate that. For the record, L2, sell 72.10. Okay. I'll take a picture of this. There you go, one too many decimal places, no? Okay. We ended up dropping all the way to 69, 63. 69.63. So if you take 72.10 and you subtract 72.10, you subtract 69.63, you wind up with 247 ticks times $10 a tick. That would be $2,470 per contract available. The original target, well, 71.80. So that made it a $300 per contract trade, and then trail if possible. Weekly trading zone below is 71.35 / 71.40. So this is last week's zone, but I'll just go ahead and scoot that up. 71.40. So we were thinking, gosh, if we get to that zone, that'll be sweet. But we flew through that thing. Now, inserts, indicators, CFRN. This is how you tip. Still no exit signal. $2,470 per contract. Per contract. Traded if you're waiting for the exit signal. But that's kind of what I want to talk about right here, right now. Some of you may have exited the trade right before the inventory numbers came out. That would keep in line with our teaching. So if you did that, that's certainly acceptable. If you did not, if because you're already in the position, you wrote it out, knowing the possible ramifications. We could be about to get an exit signal here. Now look at, because of the rapidity, I don't even know if that's a word, rapidness. Look at how fast it fell. How about that? Look how fast it fell, and look how far we are apart. If we don't get an exit signal here, and last night was a bit interesting. I put up some charts in the channel. Hey John, if you're there, just break in at any time. We'll chat with you. Is this it? Oh yeah. See the Russell. We were hawking all of the S&P, the Dow, the Russell, and the Nasdaq were all in this position at the same time. They had all just benefited from a nice long trade, and we were just waiting for that exit. We finally got it.
There he is.
We finally got it. But
there he is.
Is that you, John? No. Sometimes I throw my voice. Is that an exit signal? Perfect example of the importance of this inflection point. Is it an exit signal? No. Why not? The 30-minute candle closed right where it opened. We need a red body to close below the step line. So that's just good general information. If you don't know what a doji is, if you're new to trading, Google it. It means indecision, but they'll give you a much fancier. And then this is a close-up after that. After the doji, remember we're looking for a red close below. And here's those 17 candles in a row right there. And so they were all poised, and we knew it was coming. And you know, can you just, when this starts to walk sideways, here we have an inside candle. Well, first we have an inside candle, then we have another inside candle, then we have a I think by a tick this might be an inside candle. What we are looking for here as the clear-cut exit signal would be a green close. First the step line's got to cross, and right now the step line has not crossed. Up here, 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 that's a cross, but you would need a green candle on a short trade closing above it. Now nobody got out at the swing low, so how many people made that money? Nobody. Unless you just bumped your mouse by accident and it took you out of the trade right at the swing low. Because you never know it's the swing low until when? After the fact. This was a big red angry candle at one point. People were probably just piling in, getting short. Then it pulled back, and then the sideways walk. I mean, on these extended moves, guys, it's a little different in each case, but I mean, you see me show you every day. You get the extended move, the sideways walk, step line crosses. After the step line crosses, then you need a close in the opposing direction of your trade. And so this is a short trade. We would need a green candle to close above the step line after it crosses. So am I saying this has the potential to fall further? Yeah. Does it have the potential to not fall further? Well, yeah, to that as well. Okay. So the beauty of our methodology is we really don't give a rip one way or the other. If this candle closes green, then that means adios till the next trade, next alert. And if it closes red, hang in there. Now I'm glad it's doing this. How many minutes are left in this candle? Okay, 7 minutes. Often in the final 5 to 10 minutes of a candle, okay, especially hourly candles, the last 10, the first 10 usually holds about 80% of the action of an hourly candle. Just stare at them sometimes and you may or may not arrive at the same conclusion. So, you know, you've got a pretty good, now your hard stop, your catastrophe stop, I mean, goodness, it should be down here because the average true range of these candles, you could kick this one out and do the average. And, you know, worst case, it's going to run up and you got to get out at 70.50, I'm thinking. But because it does have 6 minutes left in the life, Michael, could it change its mind, drop below where it opened, leaving a wick behind, and close with a red body? Could that happen?
It could. It could. It could certainly happen.
What he said, folks, it could happen. The good news is you don't have to worry about whether it happens or not, because whatever it does do in 5 minutes, 5.5, you know what to do. If you trade with us, you know. Except what? It's not going to be this candle, which is going to give us something to think about when we come back and look at it in a minute. Because if this does close green, you're going to get your cross, but you got the candle before the cross. Ugh. If you want to just be completely cautious, you could just take your exit there, you know, cash your check, go home, punch out. Or you could linger just a moment, because when the candle crosses before the step line, something's in the wind. And so sometimes you just hang out for just a minute or two or 30, and you'll see it reverse and continue the trend, because we know that markets do what? Leg, retrace and leg. So back to the S&P. Last night, Concierge Trade Alert said to consider selling 28.13, which was right. Now we had that long trade that I was showing you on the S&P, Michael, where it spiked us by a tick. I mean, it went one tick above the target.
Yeah.
We actually put that alert out Sunday night. And all alerts are good until, you know, triggered or marked no trigger. And I even said, you know, this looks a long way off to be talking about now, but just save it for when we need it. And sure enough, yesterday it did the 90 to 94 and one tick, went to 4 points and one tick, and then that was the high. So are we going to walk around now and crow about how we call the high on Sunday? No, we're not going to do that. But for those who held on to it and worked it, man, this bell's for you, because you've been listening, you've been paying attention. Now this is a CTA sell. That's probably John. Yep. Okay.
Huh, his mic is still open.
Hey, John, your mic's open. We're ready for you.
Oh, hello. Hi. I didn't realize that you.
Yeah, that's okay. Yeah, welcome to the show. Glad to have you with us.
Thanks for the invite. You know, I'm kind of remember where we were yesterday afternoon, but we, you know, I think I made a pretty good call in the morning. We were up about 250, and I said 400 to 600 on the Dow, and we got to about 585 or so, up 585 or so for the day, which was pretty good. We warned overnight that there might be a sell-off, you know, from a higher level, which actually happened. And then we had this down opening, and we went for the VIXs right on the close yesterday. So we had a nice bounce in the VIXs this morning before selling them, because when we basically pulled back about 250 points, a little bit less than half of yesterday's rally, and then stabilized and started going back up, and we're basically improving the situation right now. But I mean, we're still down 60 on the Nasdaq, which is quite a bit. But we're not down too much on the S&P and the Dow, and in particular the mid cap, which was down pretty sharply this morning, is rebounding very strongly. And I'm glad it is, because if we, you know, this afternoon is very important. I'd much prefer to be in the green and positive on the day this afternoon, building on yesterday's rally, than potentially closing off today, which would be like a hanging man type of doji. And could be a prelude to a breakdown Thursday and Friday. That is definitely something we don't want to see, because as far as I'm concerned, it's Armageddon if that happens, because we're potentially facing an 87 type scenario.
Well, let me ask you. The last week when the market started to crater, and Trump pops up out of nowhere and blames it on the Fed. Now, let me ask you: has he had access or an opportunity, or has his people had an opportunity to read the minutes of the Fed meeting that we're going to get to hear or read this afternoon? Is it possible Trump had already read that when he made that comment?
Well,
could there be
maybe
something in there that, you know?
Maybe I doubt it, because I don't think maybe the minute. Well, you know, well, I guess the minutes were out, so he could have. But I think of it. So. Yeah, I don't. You know, I don't think. I mean, I think Trump has got a pretty good grip on the markets, probably more than most presidents. I mean, the guy made a lot of money out of the markets in the last few years before he had to sell, you know, becoming president. I mean, he was long Facebook for a big, you know, that was one of his holdings.
Well,
and he had
some of the rules when you become president. You got to.
Yeah. I think you can put it in a trust, I think, but I think he just sold out, which was unfortunate for him, considering the market's gone up another 10,000 points. But, you know, he made some interesting comments yesterday. You know, sometimes I wish I could kind of frame some of his statements for him, because while he gets 75% of the message across, he could hone his message to so many slam dunks. And yesterday, and he was on Fox and Friends, and he talked about how he's potentially lost billions by being president. But I think he should have said, I'd rather make trillions, or 10 trillion, or 11 trillion, or 12 trillion for the U.S. economy and the people, than worry about making or losing a few billion myself. I think if he said something like that, that would be, that he would have nailed it. But he didn't quite get the message across to that effect. And nobody can take anything away from the fact that, Trump has made, and then you get the Don Lemons who's still trying to convince themselves that Obama's got something to do with where the market is today. Give me a break. It's so asinine, it's just not even worth discussing. But
how does someone even justify a statement?
I know, it's just asinine. It's ridiculous. I've gone through the dynamics of how this happened, half a dozen times for the benefit of listeners and new people. One of these days I'll do it again, but it's this whole thing. Look, I give credit where credit's due, and in 2016 the market rallied. It had a couple of setbacks. It had the Brexit, and then it had the Trump victory 1,000-point pullback before it really got into gear. But the real story was, we had a very sharp correction in 2015 into 16, was really a big one. But it was, Trump, while there was some, we were getting to the end of the Obama influence, if you like, in 2015-16, but nevertheless it was there because, when Hillary was ahead in the polls, there was the potential third, you get a third term bounce, if you like, or third term influence that was positive. So really 2016, off the Trump low on February the 10th, which was the day he won New Hampshire, and as you know, New Hampshire makes presidents, Iowa makes corn. The fact that he won New Hampshire, made a drastic impact on that. That was when the market bottomed, and we had we called the market bottom that day, and we forecast a 2,000-point rally into the Brexit high. Then we had the Brexit crash, and then we went back up into the August, September, and then we had a modest downtrend into the election, followed by the final retest of the 2016 lows on Trump's victory night. And after that, everything was Trump. Because all the other influences, the Obama, the Hillary influence was gone, and the market was focusing on the new era of Trump. Plain and simple, and there's nobody in the world who can dispute that. It's absolute fact. But I do give credit for some of the rally of 2016 was definitely Trump. It was Trump, Obama, and Hillary. It was a kind of a trifecta because you had three positive influences. Actually, you had the flailing sort of end of the upside of the Obama era. That was sustained, if you like, or perpetuated by the possible belief that a third term, if it had happened, where Hillary would have been the next president, could have actually, in a strange kind of way, could have certainly resulted in some upside, not necessarily as much as Trump, but it because of the continuity, could have been enough for Wall Street to be a go-with situation. But I think if Hillary got in, I think the markets would be a lot lower today for a lot of reasons, and gold and silver would probably be at all-time highs by now, or close to it, because of inflationary potential and things like that. So certainly I think gold and silver would be a lot higher today if Hillary got in, without any doubt. Certainly be several $100s higher, I think. Now, I had a kind of a brainstorm last night, and I might send this over to you. It might be a good discussion point for the next few days. But I happened to be browsing some stuff last night, and I came across this article, which was a few days old. It was about a week old from the day that we were down 800 points. And Art Cashin, who is a well-known commentator on Wall Street, Yeah, he's a good guy. He's a very good guy, but he came out with something that I've been going on about. You know, I've mentioned it on this show a number of times, which is the possibility that, you know, the Western world, you know, the Weimar Republic. It's interesting. The Weimar Republic scenario started in about 1919, right? 1919, and it lasted for 4 years to 2020 to 1923, and you know, we're sort of going down the same road, and we've had some early warning signs, if you like, of the potential for this to happen in Venezuela, in Zimbabwe, in Iran, in Turkey, et cetera, you know, about 15 or 20 currencies around the world that have largely been decimated over the last few years. And the billionaires in those countries, you know, who are, you know, when you get to be a billionaire, the main thing in life is preservation of wealth, and not so much trying to be a multi-billionaire, but just keep what you got at least. And if you're lucky enough to be a multi-billionaire, that's great. But the three things that can decimate a billionaire is, you know, a disaster, some sort of a natural disaster or otherwise, or a war, hyperinflation, and currency, you know, and the currency getting decimated. So, and, you know, to think that the US dollar or the yuan, more importantly, are immune to that possibility is very much a dangerous viewpoint for a lot of reasons. You know, it's when this market unwinds, it's not necessarily going to come from just, you know, something like what happened last week. That will be a symptom of it. But the real, you know, bogeyman, if you like, out there is the 260 trillion in derivatives and the 260 trillion in debt out there. Because, you know, when all these mortgages start going up, in the, you know, so how did John Paulson go from $0 to $4 billion, you know, in 2007 to 8, because they saw the housing crash coming and they bet against it. And by the way, it's happening again. They're offering houses with no money down now. I think Bank of America. You can't even make this stuff up, but it's actually happening. And those people who, you know, look, if there's a downturn and you start losing millions of jobs per year or month, even like we did last time, you know, it's kind of unstoppable. And you know, people are not going to be able to pay their mortgages, and we're going to be a deja vu all over again. So but these derivatives that are designed to protect these and which nearly put AIG out of business if it wasn't bailed out, and put Fannie Mae and Freddie and all these companies out of business, and Lehman Brothers and Merrill Lynch and all these names that have disappeared or been swallowed up by JP Morgan or whoever, Bank of America rather. So you know, all of these things are looming. You know, they're all kind of under the surface. And the greatest thing that happened overnight, which is just staggering, is, and we've talked about this before, is that the China, you know, look, you know, we're starting to figure out how China got 14%, you know, 7 to 14% growth, or an average of 9% growth for the last 30 years. They've basically been borrowing, you know, off market, just like Enron. Okay, remember that? They've been borrowing off market to kind of pump up their whole books, if you like. And you know, they pump $6 trillion into their economy. That's basically debt today. So they've got off. You know, for an economy that's much smaller in the United States, they have a debt to GDP ratio of 3.5 to 1. So that's even worse than Japan. So it's very hard for their economy to continue to grow. And in fact, when I send you over this thing, you'll see a chart of the Chinese, you know, the Shanghai Composite. I mean, it looks worse than the Japanese market in 1989, because it's had a double peak. You know, they had the peak in 2008 with the Olympics, 2007 and 8, and a crash, and then they ran it up again, and we had this other crash a couple of years ago that has really put the Chinese miracle in some jeopardy going forward. And the real risk in the way I see things is, look, you've got a trifecta developing here. You got the potential, the next, because of the gold crash, and just like the oil crash, new money, money for new discoveries and production has, dried up for a few years. So there's a run up coming that's going to be like, just like the 80s. There was the first run up in 74, which you could call the 2011 run up in gold, right? And then there was a pullback to 75, 6, and then we bottomed in 76, and we ran up to 1980. I believe we're in a longer version of this, where it's probably a 7-year cycle from 2016. Read 720. The bottom was 106, 105, 104.6 in 76, and we run up to 875, which is, I think, about a 7-fold gain, right? Or maybe an 8-fold gain. And then, and guess what? I mean, you cannot believe this. I mean, it's like the hand above. The bottom in 2016, early 2016 was, or late 2015, I forget which, was $1,046. It was exactly 10 times higher than 1976 and 2016. So by by mathematical definition, the odds of going to 8,750 in the next 7 years, or between now and 23 or 24, absolutely cannot be ruled out, and is more than likely going to happen in one way or another. And it's going to happen because we have three powerful forces that are really, what's the word, converging to enable this to happen. And one of those is the 50% output, 50% decline in gold output over the next 6-7 years. That's a huge deal.
Now,
the second,
why do you anticipate the decline?
It's look, I didn't make it up. It's real. It's a fact. The mines are running out of high grade ore, and they're shutting down. And South Africa's production, I mean, South Africa used to produce like 1,000 tons a year or something, and it's down to like 100 or 150. It's staggering. Well, we've definitely reached peak gold a long time ago. And the second thing is the dollar. The U.S. dollar is in a 7-year downtrend. It's having a bit of a rally at the moment, but this downtrend continues. Even Ray Dalio thinks it's going to go down by 30%. I personally think it's going to go down by 50% from the highs. That's what it's done in previous downturns. That would take us down to the 70s, maybe even the 60s, and it would have a dramatic impact in inflation and in valuations, etc. So, and it would put us on a potential path of it would be very much like the 80s, the 79-80 scenario, where, listen, it wasn't the end of the world. It wasn't hyperinflation. We got to about 12% inflation, something like that. It was enough to put the price of gold up tenfold. So if we get hyperinflation, things could get a lot worse. The third factor is basically, I think you can make a reasonable argument that the world is about 50% wealthier now than it was in 2009, as we go, and it's going to continue to get wealthier, and there's all kinds of billionaires being minted in China. And, in 1979-80, there was only a handful of billionaires in the world, and the Hunt brothers, were largely responsible for silver going to $50 because they tried to corner the market before they were shanghaied. But today there's not just 2 billionaires involved. There's going to be 2,000 billionaires involved in scrambling to protect themselves when we have a Bitcoin type explosion in the price of gold, which I foresee unfolding, possibly later this year, most likely in 2019, going into the early 20s to potentially 2023. Now, what Art Cashin points out in this article so brilliantly, that he put out about a week ago, is how this Fed, it's just like Janet Yellen. First of all, she comes out, right before the downturn in January, saying, we're not going to have any more downturns, and we have done such a great job. And then the second thing is, now she's saying in the next downturn the Fed should do more, right? In other words, print more money, even buy equities, like they've done in Switzerland and Japan and places. So they're falling into the same trap that the Weimar Republic did in Germany in the early 20s. So the inflation, there was no inflation from just like now, there was no inflation for most of this decade, a century ago, and then 1919, the inflation started, particularly in the Weimar, and the government printed more money, and it shows there was only like 12 billion marks in circulation at that time, or maybe 6, or I forget the number now, but it was a limited amount. By the time they finished, there was like a trillion, 100 trillion marks in, I don't know, trillions and trillions of marks in circulation. So they printed, thinking that they could revive the economy. And it's a little bit like, we've gotten to this 4%. Could we go higher? Yeah, we could still, there's still a couple of years where we could really do very well. But I think in the early 20s, we're going to run into trouble. And that's when the Fed may try this QE. They might kind of do QE to the power of whatever, right? And guess what? When the economy doesn't respond, they're going to suddenly get into a hyperinflationary scenario, just like the Weimar, except it's not going to be the Weimar this century. It's going to be the Western economies, the Western world, with all this debt and all this, and the risk of all these currencies going down the tubes. So that's why gold today is a very interesting situation in terms of what could happen in the future. And as far as I'm concerned, it's a trifecta unfolding where who nobody can even begin to fathom. Look, the UN, you look at the Chinese economy, they are a candidate for devaluing their currency, which they've already started to do. The yuan's lost more than 10% of its value in the last 6 months. It's actually making new lows almost every day because
now,
the Chinese,
the tariffs?
Yeah, and look, they're competing against the Japanese, they're competing against the Vietnamese. They're probably competing against North Korea now because they've got a new low-cost market and they're competing against Mexico, etc. So and they're competing against Malaysia and Borneo and all these new economies where people are moving manufacturing. So Chinese production is imploding. In the same, they're losing factories the same way as the U.S. did, over the last 15 years, and we're gaining factories again. So, we're certainly doing pretty well at the moment. But I believe the Chinese yuan crashing will drag the dollar down, and they'll go down together in time. But when that happens, if the yuan starts crashing 10-20% or more, you're going to have 1.4 billion people trying to buy gold at the same time. And that's what nobody has factored into the equation just yet. And then on top of that, you got all these billionaires around. Look, you got all the Chinese billionaires, who I mean, it's a sad undercurrent of China itself. When recent poll, like 2/3 of the Chinese want to live in four countries: the UK, Canada, USA, or Ireland. I don't even want to live in China. So, they want to get out of China. And if everything hits the fan and the Chinese economy goes south, it's going to be every man for himself. And that's why, so there's a lot of things lining up. The stars are aligning, the planets are aligning for something really monumental to unfold over the coming, 6 or 7 years that could rock the world in a huge way. And I think we're just at the early signs of it happening. And, this article that Art came out with was just shocked me because I'm absolutely on the same page as him, and we've been talking about it here for quite a while now. And these kinds of things could unfold very rapidly and without warning as well. And because of what we've seen with Bitcoin. And look, you look at the Chinese. I mean, the Chinese officially own about 1,800 tons of gold. Some people say they own 10,000 tons or even more. Maybe they do.
There was a rumor one Sunday night on Globex Open that they bought a ton of gold.
Well, look, listen, if the Indians, it's a long time since the Indians came out and said they bought 200 tons of gold overnight. But if they did something, I guarantee you, listen, I can tell you, if they announced that they bought 200 tons of gold, you'd see a $200 move up in gold very, very quickly. You know, I remember from before, you know, when they bought 200 tons of gold before, usually had, you know, they buy 100 tons, it pushes a price up about $100. They buy 200 tons, it's a sort of a dollar per dollar kind of thing. If the Chinese suddenly announced, you know, their new reserves of 2,200 or something, which is probably likely, I mean, you know, gold's going to go up $300 or $400 pretty quick. So it's certainly you know, there's earth tremors going on in the gold right now. We're not completely on our way yet. I wouldn't rule out some more downside testing. We're not actually acting that great today, and the stocks could pull back some. Still, there's still a chance of a retest between now and the end of the year. You can't rule that out. You know, we've seen this kind of trend where towards the end of the year, you know, gold can get under pressure. It may not happen this year, but you have to be ready for it. So, but I think early in the new year, it's going to be gold's year next year, and that's probably going to carry through for 2 or 3 years. And remember, look, since we're emulating the 1979, you know, the 1970, late 70s, gold didn't really get going until late 78. So here we are in 2018, you know, we could see a late spurt into the end of the year, or 2019. You know, gold actually didn't really start to move until 1979. And in 1979, you know, literally went up from the low few hundreds up to 875 in less than a year. It didn't actually, you know, I think it got up to 400 sort of by August, September, and from September to January 20th, literally went from 400 to 800 that quick, you know, in just 3 or 4 months. So we're, you know, something like that could be around the corner for us as well, and it could be brought upon by a lot of things, including, you know, I mean, look, the Russians are buying 40 tons of every month, you know, almost methodically and almost, you know, uniformly every month. The world is running out of gold. There ain't no more gold to buy. The market's tightening up. If it's not, explain to me why the commercials, who are the people like the jewelers and that, are more long today of gold than they've ever been in history. Because they must, why would they be long? Because they must be sensing that the market's getting tighter and tighter, and that they're going to have to pay up. So they're hedging their future purchases by locking in today's prices. It's plain and simple.
Recently we talked about the largest number of shorts in gold. Now,
well, that's, you know, look, you have to have, yeah, but you have, in just the same way as, you know, from 2009 through 2011, even though the market was already rallying, you know, October the 4th, 2011, which was the bottom of the sell-off that started on July the 25th or 6th, and then we had a sort of a 20% crash. That loaded up the shorts higher than what we were in 2009. So we had a divergence. We had a bigger short position on October the 4th of 2011. We had an all-time record short position on Wall Street on that date, even though we were 2.5 years into the bull market. That's exactly where we are today with gold and silver. We're at all-time record shorts in the hedge funds and in the speculators, and they have to be, that's what's going to fuel the next few years of upside in gold and silver. It's the commercials are the guys who control the market. The speculators are the people who are betting the wrong way because they've probably been listening to Harry Dent or something. Now, and here's the point: what happened after you know, October the 4th, 2011? You know, do I need to remind you? We went up in 11. The rest of 11. You know what we did? 11 to 12. It never happened before. We gapped higher from December the 31st or 30th, whatever the date it was, the last day of the year. We gapped higher to the opening in January. Then we did, when we went up in 12, we gapped higher from 12 to 13. And then we had a 4-year bull market in stocks to 20, we went from 11 to 15, and that blew everybody away because nobody saw this coming. This was the QE. And that QE, is going to be manifested in gold. It's like a hangover, you know. 5 or 10 years down the road, that QE is going to come in and influence gold in the same way that the market benefited from, you know, 2011 to 2015. Then we had the correction, and then we had the 10,000 move that we're on right now with Trump. So that tells you that down the road, you know, you have to pay the piper, and gold is going to be the ultimate beneficiary of some kind of an equal move up. I mean, if we go up, you know, the market's gone up, the Nasdaq's gone up 500% off the lows. If gold goes up 500% from where we are today, we're going to be up around 6,000 or so. You know, which I don't think anybody's going to be disappointed in. So, and knowing the way the world works, we're probably going to go more like 8,500 or 8,750 or somewhere like that before this move is all over. And not only that, you know, there might be a pullback, and it might be different this time, where we might pull back to 4,000 and then run up to 12,000 or even a lot more, because who knows what's going to happen with the world monetary system, you know, in 5 or 10 years time. It might have to be reorganized.
Do you think there will become a new reserve currency? Do you think you see that as a possibility?
It's a lot of things that could happen, because, you know, the dollar's reign as the world currency is under threat. It's under attack by Russia and China. There may be many ways to bypass the dollar by then, which could put pressure on the dollar. The U.S. economy, look, sooner or later, I mean, assuming Trump gets reelected, we should have a pretty good run between now and 2022, right? But the last 2 years of every second-term president usually ends badly. I mean, it ended. Yeah, it's a fact. There's a lot of turmoil. You know, when Clinton, in the last couple of years of Clinton's reign, you had the Lewinsky affair. You had a couple of 1,000-point crashes in the Dow. It finished off well that decade in the end, and so did Reagan's. But we had a pretty bad crash in '87. You know, that definitely. You know, and it's happened to every president, almost every second-term president. So it's probably going to happen to Trump. And since Trump is presiding over the greatest rally of all time, we're probably going to have a humdinger of a pullback, you know, in 2022, 23. And guess what happened in 1922? We almost went back to the 1907 bottom, you know, before we had the roaring 20s. And, you know, it had a bull market that finished in 1929. And there's a very good chance we could map out a pretty similar sort of a, you know, I mean, there are people out there like myself who believe we started a 15-year bull market in 2016. 15, you know, that takes us through to about 2030 or 2031. And there's a pretty good chance that this is going to unfold. However, there was a big hiccup in the middle in the early 20s. And you know what? You can go back every single decade since 1903, and every single decade has stumbled in the first 2 or 3 years. It's just happened. So the odds of the early 20s becoming a pretty big pullback, and look, we could pull back to 10,000 on the Dow, maybe even 8,750. It wouldn't be as low as the 2009 low at 666, whatever it was, 6,000 or so. But it would, you know, it got back to 8,750, which would be a pretty good bottom where it just takes out the 10,000. It could only happen over a day or two, and you could have a spike up to gold of 8,750. They could kiss right in the middle at 1-for-1, and then you'd achieve the same point that we hit in 1980 and previously in the 30s, where the Dow and gold were 1-for-1, and that might be the top in gold for almost a generation beyond that. So, you know, there could be some kind of a thing that could cause a real panic in the early 20s, and all of this could occur, and it's certainly highly plausible the way I'm, you know, for a lot of reasons, because, you know, if you look at the 19th century, look, the Industrial Revolution started in 1875 and really went on to the 30s, you know, to the Depression. And the technological revolution started a century later in 1975, still ongoing, and it has the potential, with a few hiccups in between, to run all the way through the 30s, because the innovations that are coming in the next few years are just mind-blowing in terms of flying cars and space travel and everything else. And power, home powered, the end of the grid, end of the power stations, and home power is going to be a really big deal. And all kinds of other, and automated driving, and all kinds of great things are coming.
There's a site, John, called WeFunder. Are you familiar with that?
No, I'm not.
You might check it out at some point. It's WEFUNDER.com. And it's kind of a Kickstarter, but instead of getting a T-shirt, you actually get shares in the company. It's okay. Anyhow, one of the ones right now, they've come up with a solution to create clean hydrogen. I know you've been talking about the hydrogen battery for I don't know, almost a decade.
Yeah, no, I'm a huge hydrogen fan.
So what is this clean hydrogen? Why does it need to be clean, and how could these people be clean?
Well, hydrogen is generally clean the way it burns, because it is zero emissions. But if they can find a way to either generate hydrogen as a fuel in a unit that can power a car or a bus or a truck, or something of that possibility, and also in a way that's safe, though it doesn't have explosion and things like that. I mean, that's the next generation. It's just like Kenny was talking about, this hydrogen powered plane. I mean, that's
this might be it right here, John. Cheap, safe, and clean energy generator, the power of the sun recreated on Earth.
Yeah. I think that guy's a smart fellow. I've seen him before, this Eric Lerner.
Inventing a new... Oh, this guy,
Yeah, I think so. Yeah.
Eric Lerner. His name's...
So, yeah, so, look, there's a lot of exciting things coming. I mean, I'm still, I'm absolutely dumbfounded. I'm still thinking about, because they interviewed that astronaut yesterday on TV about surviving that rocket failure. I mean, to survive a 5,000 mile an hour rocket launch is just, it's a world. Nobody's picked up on this. You only heard it here, but no, it's the first time in history that anybody's ever survived a failed rocket launch.
How did the pressure? Now he ejected. Is this correct? No, he didn't eject.
Well, the capsule ejected and managed to survive ejection of 5,000 miles an hour, which is, I guess, it gives you some confidence that when hypersonic transport comes, that there might be some safety. Some sort of safety.
Trump didn't call a news conference and just say built with American steel or whatever it is they make these capsules out of.
Say again, sorry?
I'm surprised that Trump didn't call a press conference to announce when that happened that whatever material the capsule's made out of. I just said, Trump, I can see him pointing to the capsule made with American steel. Yeah.
Well, I think this was a Russian capsule.
Probably not. It's a Russian capsule. Okay, so yeah, he get caught up. He get tripped on that. Look at this up on the screen. That hydrogen thing, the cost will be 10 times cheaper than any existing energy source.
Yeah.
And it is using our small decentralized generators. We use hydrogen and boron fuel, both of which are essentially unlimited in nature. Now, how is that? How is it that these are limited? Is it something that gets reproduced? Like with fossil fuel, we have, a finite supply, but they're saying that the hydrogen and boron are essentially unlimited in nature. Yeah, no, they are, and I mean, look, it's going to happen. I mean, we can't even imagine what's coming, and all these things are coming soon. They're pending. I mean, apart from the rest of the world, I mean, they've still gone on about this climate change nonsense, but and by the way, another thing that Art Sutton came out with yesterday or the last week is he's got a friend who's a climate guy, meteorologist,
And he's saying, as we've been talking about this show, on this show, there's an ice age coming. There really is, because apparently in the last...
You've been talking about that for a long time.
Yeah,
Too.
in the last, well, we've had listen, we had a unbelievable cold winter in Europe last year, with the canals freezing up in Amsterdam and the estuaries. We didn't get the freeze over in the Thames yet, but that could be coming this year. And already back in the summer, there was a Paris article, a French article, saying that it was going to be the coldest winter in Europe in a century. And it's, you know, it was snowing in Baja California yesterday. It was down -5 degrees in October. So in Baja California.
Whoa, wait a minute. In Baja California yesterday,
yeah,
did you say?
Apparently, yeah. So you know, I wouldn't be surprised if we're in for a pretty cold spell for some years to come. Now, you know, the U.S. can take a lot of credit, because it's the cleanest, one of the cleanest countries in the world today. In spite of them trying to hit the rest of the world, trying to hit them up to basically bail out the rest of the world's climate problems. Why should they do that? And that's why Trump's not for this deal. You know, for trillions of dollars. Why should the U.S. be paying the trillions when it's the least offender on the planet, practically speaking? And I mean, there's a drastic improvement in smog levels in the U.S. and in the Americas, actually, because even Mexico City's gotten cleaned up from where it was years ago. The problem is in Beijing and in Asia and in India, and these places where they still have millions of bikes, you know, spewing out smoke and stuff. That's the problem. So, the other, so I think we could be in for a real shocker of a winter, because apparently this geologist is saying this, or this meteorologist is saying that the lack of sunspots is a real game changer for the climate.
You know, apparently it snows. It's not uncommon to see snow in the Sierra de Juarez and Sierra de San Pedro, and in the valleys in between from December to April. Due to orographic effects, precipitation is much higher in the mountains of northern Baja California than on the western coastal plain or eastern desert plain. Interesting. I did not know that.
Yeah, well, the other thing is, you know, that whole Iceland area, you know, maybe there hasn't been much talk about it this year, but several years ago, the whole of that Arctic area froze over in August. You know, it never really thawed, and you know, there's many. Well, it's going to be interesting to see how this winter shapes up. But we definitely have a you know, pretty early cold snap unfolding already. And if it intensifies in the next few weeks, you know, it's probably, you know, fairly certain that we're going to have a pretty cold winter. And they've already said it's going to happen in Europe, so it could be. I mean, look, the Great Lakes have frozen over for the last few years fairly routinely, and that's not always a given. You know, in the last 10 or 15 years, it didn't happen every year. So. But it's weird because, you know, some of the Arctic Circle, you know, the Arctic Passage, the Northwest Passage is actually a lot more passable than it's been in a while, but, you know, that could change overnight.
Can you see my screen, John?
Yeah.
That's Mexico.
Yeah.
Mexico.
So is that
this is Baja. Now, this wasn't yesterday, but it is a picture of snow in Baja California.
Yeah.
Up in the mountains.
Yeah. Well, it's snowing on top of that volcano. I saw a live picture of that a few days ago. The Popotil, you know, the Popo, and that's got snow. That's snow capped already.
Did you read that article the other day? It was one of the science magazines. What was the greatest volcanic explosion that we know? Was it Vesuvius?
Krakatoa.
Okay, it wasn't Krakatoa. It was another one. I think it's started with a V. With that.
Oh, you might have been. Yeah, that was a bad one.
Well, okay, what this scientific article said is that archaeologists digging around there have come to the conclusion that thing erupted with such force that people's heads exploded. That's not a pretty thing to think about.
No, it sure isn't. It sure isn't. But you know,
is that, you think that's possible? These were
yeah, absolutely, absolutely. I don't think we're immune from anything. You know, it's yeah. You know, the other thing that's kind of been on my mind since it happened, because you know, listen, I probably didn't say this on the show, but when I worked for Adnan Khashoggi, I mean, listen, it was the most riveting experience, one of the most riveting experiences of my life, and it was an unbelievable experience. Just being involved, just working with people at that kind of level. I mean, this was the richest man in the world at the time. I mean, it's with about 5 billion back then, which is probably somewhere between 50 and 100 billion today. And so he, you know, and
person was he like a nice guy?
He was a fantastic guy. Listen, he was a real gentleman. I mean, the day the very first day I ever met him, he was waiting when I walked up the you know, or actually when I was standing by to welcome him on, because it was the first time, and he knew who I was right away, and he said, "I hope you're going to have a very pleasant time with us. Welcome to our organization." He couldn't have been nicer, and it was a I mean, look, we had a who's who of the world that we were entertaining everybody from Aristotle and Nasus and Niarchus and all these people who used to come on, and you know, the kids who, and including Hamal, who was the cousins, all these people, you know, were in the environment, and you know, the Trump princess. I mean, in a strange kind of a way, if I'd stayed in that world, I probably would end up working for Trump because he bought Khashoggi's yacht. He bought the Nabila. Oh, really? Yeah, he didn't buy. I'm not sure if he bought it directly from him. I forget now, but you know, I was on the Nabila when I was working for Khashoggi, and one time, I mean, look, today there's so many private jets in the world. It's old hat, but back then, for somebody, you know, there were private jets, but nobody had a DC-9 or a 727 back in those days. And we were in Rome, we were at Fiumicino port there, and I had to go to the airport, and it was like, you know, the movie No Way Out. I mean, I was like that guy, you know, Kevin, what's his name, the actor? No, for I forget now. Anyway, he, you know, in his whites with the uniform and the stripes and everything, and here I am at the airport trying to arrange for Khashoggi's arrival on a private DC-9, and the people, I was up in the control tower, and they didn't even believe that anybody could own a private DC-9. I mean, seriously, it was his first time he ever landed in Rome, and then it was crazy because, you know, we lined up all these Mercedes and limos and stuff to take him and his entourage, and you know, we had this unbelievable ride. There was some kind of a maniac driver, and I'm sitting in the back with Khashoggi, and on our way into the center of Rome. And I mean, if you've ever driven in Rome, I mean, you can't even imagine the traffic is out of control there. At least it was back then. And you know, I mean, it's probably more civilized today, but you know, in the old days they used to honk the horns in all these places, and it was, I mean, it was just crazy. It was just like that. It was like out of a movie, honest to God. So, and there were plenty of crazy experiences like that with this guy.
What took you away from that life?
Well, it's a good question. You know, it was kind of surreal, to tell you the truth. You know, and it was actually kind of a summer job for me, and I had another job waiting to. This was the one where I went from Khashoggi to the Wildenstein yacht. I went back home to Ireland, and then next thing you know, I get a call. The first call I got was, can you deliver a yacht from Lisbon to Greece immediately? And this was like a schooner, you know, this was like a tall ship. And I said, sure. So, you know, and then a couple of days later, the guy called me, and he said, no, forget about that. He said, look, he said, it's kind of an old ship, and he said you might run into problems with it. Might not even be seaworthy.
Wow.
and so he said, I've got to, can you fly to Fort Lauderdale right away? He says, I've got a you know, a 600-ton, 200-foot long yacht that needs you, and you know, we need you right away. So that's what I did. you know, there was a few personalities involved in the Khashoggi thing that really, you know, I mean,
every day was a drama
yeah,
of some kind.
yeah, if I persevered, I mean, the captain, look, the captain was a good guy, and he ended up being Trump's captain. But you know, the fact that he ended up being Trump's captain meant I would have probably been the relief captain on the Trump princess, and I would have probably had to endure whatever, you know, dramas, you know, that would have happened over the coming years before Trump entered into the scene. So, and to be honest with you, you know, the second phase that I did on the Southern Breeze on the Wildenstein's yacht was even more dramatic in some ways. I can't even talk about some of the things that went on there when I was there. They were some, and that was a cruise around the Caribbean. It was a fantastic experience.
Back in the days of Lifestyles of the Rich and Famous, or was this?
Yeah, it really was. Yeah, it was probably a bit prior to it, but it really was. And as you know, Khashoggi was on it. Yeah, he was on it. And I mean, he was a smooth operator. He's a very, very classy guy. And he was a real gentleman. And you know, he had his hangers on, and some of these people, you know, his entourage, some of these guys some of them were good guys, and some of them were, you know, not so good. But I don't think they would have killed this guy if Adnan Khashoggi was still alive, in all honesty. I don't think they would have. They would have they wouldn't have done it, because he's too revered. You know, he's like an elder statesman of Saudi Arabia, and I don't believe he would have been. They would have done this. And unfortunately, he died earlier on this year. And and his brothers are not really in the mainstream like Khashoggi was. They're kind of pretty low key. I think they live in the States anyway. And I listen. I'm mortified for the kids and all the relatives, because you know, I think he was revered by everybody, and it's a devastating, it's a totally devastating thing. I mean, it's a worldwide, you know, outrage of monumental proportions, and it's just, and I mean, I can't, you know, you can't fathom this, but when you know, Khashoggi to me is such a name that's emblazoned in my head, and to see it on the news like every 5 minutes, it is surreal, to tell you the truth. And then after those two, you know, they wanted me back on the Love Boat, to be back as navigator on the Love Boat. So, you know, I was kind of drawn to go back there, and you know, it just the way things worked out, it never, you know, just the next few years, I never really harkened back to that. But I was kind of pined after it. I would have liked to have given it a better shot. But the thing is, you know, there was a lot of entrenched people there on these yachts with their little fiefdoms, and the captain, you know, I mean, he's like the king of his own realm, and he didn't want anybody encroaching on that, if you can get the gist of it. You know what I mean? Mm-hmm, mm-hmm. And that was the sense I got from both these experiences. You know, it was going to be very hard to crack into it if you didn't get your own command. You know what I mean? Right. No, I got you. So, yeah. So, and listen, I don't know regrets. It was a great experience, and it was, you know, it was an eye-opening experience, and I learned a lot from it, and I had a good time. I had a great time.
Oh, I bet. Yeah.
Yeah. Yeah.
Although I didn't necessarily mesh with the military the way so many people did, but I saw the world. I went to places, you know, Hong Kong, Philippines, Korea, Australia.
Yeah, no, it's the same thing as you. I mean, see the world. You and I were globetrotters, you know, in the extreme, long before it became fashionable, and it was a great privilege to be able to see, because we saw the world back then, mm-hmm. You know, not like it is today, where it's, you know, ruined by tourism and all the rest of it. You know, it was the real world back in those days. You know,
Was it Kevin Costner you were trying to think of?
Okay, yeah, that's the guy, yeah.
Okay. Yeah. Thank you, Melissa, for that. Now, Kevin Costner, he's got his own TV show now. First season's already over. It's called Yellowstone.
Yeah, well, the other guy who got his TV show the other day, Alec Baldwin, that was a bomb. Didn't go down very well.
This is a spoiler alert. I'm not going to tell what happened, but you know about Roseanne Barr and how they brought her show back. The premiere was last night, but they brought her show back without Roseanne. If you haven't watched it, I read an article this morning that spoiled it for me, but the way they explain why Roseanne is no longer part of the family, I'm not going to say anymore. I want everybody to go watch it on the VCR or on the on-demand, and we'll talk about it tomorrow. And I'm interested to get your opinion if they did the right thing or the wrong thing. And so,
okay, it might be repeating it on Saturday night. Sometimes they do that on ABC.
do you have access to anything like here with my cable? See, I can just go down and just punch up without recording it. I can just punch up on the cable that show that came on last night, and I can say I'd like to watch it now, and it'll play it. You can't fast forward, you can't rewind. They make you sit through the commercials. That's the price you pay for having that luxury, I guess. So you don't have that on your setup? Are you satellite or cable?
I'm cable, but that particular doesn't have that feature yet.
Okay.
I might be some of it might be available on Netflix, you know.
Yeah, we got the Netflix, the Roku. We got an Apple TV somewhere. It's in this house. It got put away when we got the Fire Stick, the Amazon Fire Stick. We unhooked the Apple, and we put it somewhere. And this is the oddest thing. I have a piece of software on my computer that runs the home network, and it creates a network map, and it shows every internet connected device, you know, within range of the Wi-Fi. That doggone Apple TV pops up every time. It says it's still connected to the router, and I don't see how that's possible. It can't be plugged in. Doesn't have a battery. Is there some way that a device like that without a power source could connect to the internet? Or could connect to your router?
Sorry, say that again.
Okay, when I bring up a network map on my big screen, it shows every device in the house, every Roku, every Fire Stick, every phone, every tablet, every computer, every laptop. It just maps it out for you. It gives you the MAC number, the IP address, and the Apple TV, the little hockey puck thing. Even though we can't find it, it's lost somewhere in the house, the map tells us it's still connected to the router. Isn't that kind of weird?
Could be.
If the device was turned off or had no power source, it was undetectable.
Most likely.
So yeah, maybe there's just a glitch in this. It's the Netgear Genie software. It's not a professional grade software. It's just consumer. So I'll check something out on the.
Yeah, as far as the market's concerned, Wayne, like I said, if we can get back closer to positive today, that would be a good thing. But if we don't,
John, right here, last night we put in 17 30-minute candles in a row, right there, 17 30-minute candles, and this was last week's lowest weekly trading zone, and somehow price has just gotten magnetized to it. It dropped down to one of this week's zones, and then popped right back up to last week's lowest zone.
Yeah, well, you know, it's struggling at the moment a bit, but you know, if it turns down again, that would not be a good development.
If it turns down, we'll be waiting with arms wide open, and we'll escort it right down to this zone right here. That's what we'll do. Or we'll do our best to do that.
If it breaks upwards, that would be constructive in my view.
Breaks up, there's our plan right there. So we're ready.
Yeah, it doesn't look too bad actually the way it is right now. It kind of looks okay on the hourly.
Those wicks poking up above.
Yeah.
That.
Tomorrow is the problem. You know, tomorrow is Thursday. You know, tomorrow afternoon, if we have a late sell-off for any reason going into Friday, that would be a problem. You know, that would be worrisome.
Oh, Gary had mentioned in the chat room. Hang on, he gave me a link, Federal Reserve Bank, but he said that in these notes here at bankrate.com, I guess do they actually publish these? It says they imply more raises are to come. Now that may be what Trump's referring to, and that may be what a lot of people don't hear. Oh, did you see this before I go to something else? A 90 kilogram stone has an estimated gold content of around 1,000 ounces, and it came out of it's a large gold find at Beta Hunt, which Don said was an old mine in Australia. They were trying to bring back to life, and look what, and they found something.
Yeah, there was a story a month ago about an Australian mine. They were down quite deep. I think they were down 500 meters or somewhere. Mm-hmm. And they encountered some record size nuggets, some really big nuggets. They found $15 million worth of gold in about 4 days. So.
Okay, so this was the initial commentary that came out after the last Fed meeting. The minutes that thank you for that. Appreciate it. But yeah. So this afternoon, I'm just saying there's the possibility that these Fed minutes, whatever's in them, could set these markets.
You know this thing that we talked about earlier on with Trump kind of getting on the Fed's case. It might. I think that's the reason why Art Sutton wrote this article, because you know it sort of may result in the Fed. I mean, imagine if they didn't raise rates next time around, you know, in December, and they may not, because you know, I think the economy is already showing signs of slowing down in spite of the expansion in jobs, etc.
So we've had 3 increases this year.
Yeah, but I mean, you know, I'm almost certain there's going to be some rate decreases next year at some point, because it's just highly likely that they're going to boost the economy before the 2020 elections, and you know, the third year of a presidential cycle is usually a pretty good year. So and it could be a great year if they do that, and that would set the stage for, you know, potentially 32,000 Dow by 2020. But in the same, by doing that, they might be unwittingly creating the very scenario that Art Sutton and myself have been talking about here today. Sorry, Art Cashin. I used to know an analyst called Art Sutton. Very good guy as well. Yeah. So you know, that in other words, by not raising rates sooner, they could be setting the stage for a kind of a hyperinflationary blow-off in the early 20s by getting behind the curve on inflation, you know.
Yeah. Well, that's something that Dr. Tom was discussing a couple weeks ago. I had a question when he came on the show, was did we think hyperinflation was a possibility in the United States? And so I guess from what you're saying, it is.
Yeah. Well, look, they got to get rid of this debt one way or another, and you know, try to kind of start over. And it's happened a couple of times before. So to just arbitrarily say that the debt is going to keep going up, I don't think that's necessarily the case. Especially with, you know, Trump saying yesterday that he's determined to tackle this debt in time, and look, there's probably a few surprises, even though the debt.
2 minutes, guys. Notes in 2 minutes.
Okay, in a way, Dwayne, the surprise. Look, even though the debt has gone to 21.5 trillion, which is pretty much where the GDP is now. I think the GDP is 20.5 trillion. So it's actually, you know, they're pretty close to 1 for 1. You know, if he was able to get the debt back down below 20 or even 19, 18 before the end of his presidency, that would be a pretty big accomplishment. And you can't rule it out from happening, because the revenues over the next couple of years, you know, in a 26 to 32,000 Dow economy, actually could be you know, could be a few trillion positive. Kind of happened with Clinton, if you remember. And it didn't really happen with Clinton until the second term. But you know, as Trump says, there's a lot of fat in the economy that could be trimmed. And if they start tackling that, that would actually be pretty positive for the economy in general. Because, you know, remember, I mean, they started this debt business, you know, drawing down the debt, and improving the balance of payments probably in around 95, and that's when the Dow really started, you know, putting on the afterburners, you know, and by 1997, 98, we were pretty much, you know, cash flow positive on the economy. It really, the person who really screwed up the economy, the debt thing, was George Bush. Gave away too much in the early 2000s because he factored in all these subscriptions and things. That's the killer. If they canceled all that, that's great for the drug business. But if they cut back on all that, I mean, they could probably knock off about 400 billion a year, 400 or 500 billion a year just in that. You know, would be costly to the people, but it's you know, in a way, there's probably a lot of abuse because everybody's taking all kinds of medications, probably too many every day, and you know, a lot of it has to do with when you get stuff for free, you know, there's no stopping it, you know. So
no, you're right. Okay, Fed say some here. Let's hang on a second.
Overall, the Fed agreed that a gradual approach to raising rates balanced the risks of going too slow or going too fast on the economy. Participants saw a stronger labor market. They saw economic activity rising at a stronger rate. In fact, a few saw stronger growth than they had projected. There was a modest impact seen from Hurricane Florence at the time. A number said they saw stimulative effects from fiscal policy, though they would likely, quote, diminish over the next several years. In fact, the staff forecast, I hadn't seen this before, sees below trend growth coming in 2021. Now, on some other hot button issues out there, some on the Fed Open Market Committee said trade is a source of uncertainty about growth and inflation. There was concern about the strengthening U.S. dollar and the divergence of the U.S. economy with other economies. There was concern about financial stress in emerging market economies and that could spread. Finally, on the upside, they said, hey, we could have better results from fiscal policy than currently seen in the forecast. Back to you guys.
Steve, why don't you stick around? Let's also bring in John Bellows of Western Asset.
Okay, so far we got a pretty tame reaction. So not much of a reaction at all. In fact, that's what she just said. Not much of a reaction. Let's see if now the S&P started to move, and so I hedged that position. Okay, but we're not jumping in up here in the fray. We're down. We're well down below. So if you're a passport holder, be sure and check.
Well, you hear that about the economy slowing down in 21. Mm-hmm. This is exactly what we've been talking about here on the show today. You know, so that's the sort of thing that would tank the market in 21, 22.
Don says, what's sad for Republicans is that none of them ever ran a budget surplus or paid down national debt. Ironically, it took a Democrat to do it, Clinton. Huh. Is that true? I didn't know that. Is that how you say it?
Sorry, say again.
Clinton, no one, Republicans couldn't give us a balanced budget. Clinton finally did. I wasn't much into the markets or politics at that point in my life.
No, no, it was Clinton and the Republicans, because the Republicans had control of the House at the time. And remember, Clinton shut down a lot of bases, which didn't go down too well either.
Okay, guys. All right. So, I just wanted to look at gold real quick and see if it reacted. Boy, it's quiet. it's sitting in this week's one of this week's zones, 27, 28, just kind of lingering inside. Now, what do bonds do? Bonds make any kind of a move? A little bit, not much. Well, this is a tame reaction, and I was thinking that because of what I saw Sunday night, and I was anticipating some great volatility this week, and we have had volatility, no doubt, but not the size of what I was looking for, and I thought this could be the tipping point. Who knows? After the talking heads get a hold of it this afternoon and bounce it back and forth, they might be able to turn it into something that it's not, and then people could react to that. Now, do you think Asian markets and European markets will react to these minutes differently? Do they have a reason to react differently than the U.S. has, which is pretty tepid? Do you think the Asian session or the European session will show any reaction at all to the Fed minutes? Expect growth to moderate in coming years. Well, I mean, Trump's done so much, it's hard to take the next year off, practically. Decoupling of global growth, a downside risk.
We're starting to get this is probably a retest spike here, and we're starting to go higher again. So, not most of the time the minutes turn positive after a while. So it's probably a positive. The crude, the West Texas crude has crashed below 70. So we basically, as you know, I think alongside us, you and I have been selling this since the last peak in the middle of the storm. And it's really starting, the oil really starting to break down right now. So that's a good sign. I wouldn't buy it unless it went back above 70. I'd take a shot at it if that happens. But there was such a big drawdown. I don't think it's going to go anywhere higher.
We never
the next few days, unless something bad happens, in Saudi Arabia or something,
Still no exit signal. If you're short this position, there's no reason.
Yeah.
To exit.
No, stay with it. Stay with it.
Very close right here.
Yeah.
It did not give the official signal, so let it ride. We're back down.
Okay. Well, listen. Thanks very much for the invite, Dwayne. It was a great show.
John,
and,
absolutely, yeah.
Okay, all the best.
Day, and I'll talk to you soon.
Thanks.
Okay, back to the ES. On the ES, we talked about, let me take care of John's mic. If you have any questions about anything, put them in the chat box. I won't be here terribly long, but I'll be here a little bit longer. So here we go. Okay, partners workshop tomorrow night. Workshop tomorrow night, because workshop includes both partners and passport holders. So tomorrow night, 9 p.m. Eastern. Be there. Send questions ahead, email them in, charts, anything that you want to talk about, discuss. I put 3 new Mind of a Trader episodes out in the active discussion channel last night. Listen to those. That might get you thinking about something that you do want to discuss further and in depth tomorrow night during the workshop. So by all means, take advantage of that. Okay, we've talked about last week's lowest weekly trading zone and how price has just stuck to it like a magnet after blowing through it last week and coming back to it this week. Now this is one of a sneak peek at this week's weekly trading zone. I'll put them all up tomorrow, as I do on Thursdays. So this is the zone ahead, overhead, zone below. I don't think we're going to do this till the show opens tomorrow. In fact, by showtime tomorrow, I think price will either reach the zone overhead or the zone below. And there's very few absolutes in trading, but I absolutely believe that's what will happen. Doesn't mean it will. It's just what I think. What do we got here? Okay, on the Dow, Concierge Trade Alert. It said to get long 25,840 if the opportunity presented, and well, by golly, 5 ticks. Sometimes you get stopped out by 5 ticks. Okay. And then here, 94 points, $5 a point, $470 per contract available on this side. On the Russell, we triggered on the short side, 25 points, $1,250 per contract available. We went up and tried to get above the trigger, but we couldn't, or haven't. Better word, we haven't yet. Crude oil, we've already talked about that. This was the L2 sell, 72.10. Trade alerts, 72.05. They come out at different times, and either one, we don't have an exit signal as of yet. We came real close right there, but no cigar. Will we take out this low? If we take out this low at 69.63, what's below? How about 68.50? What do you think? 68.50, 45.50. This is this week. Because if you're still in this from yesterday, or in it, period, it's nice. 45.50, yeah. Kind of nice to have something to set your sights on. Now, does that mean when it hits the lowest weekly zone that you just automatically exit? No, you do expect it to be good support. The most likely thing that will happen is consolidation. Second most likely is rejection, and the third most likely would be a slice right through it. And on a slice, price will come back to test for good resistance and then continue in the direction of the slice. So from the entry down here, we figured out $2,400 per contract is available. That's what the market made available. Doesn't mean that's what you took out of it. You take out of it what you take out of it. The market makes it available. It says, here you go. Some say you have not because you ask not, or in this case, take not. So here we go. This is gonna be a deciding moment. Now, sometimes with things like Fed minutes, we can get a delayed reaction. Delayed enough so that enough people finally do enough things in the same direction that it starts flipping switches on all the computer trading programs, and then that can cascade and cause all sorts of things. And so an hour from now, you're like, well, where'd that come from? Well, it was the market ticking off the little boxes on all those computer algorithms, and then once it says sell, it sells until it says buy, and then it buys with no other input. All right, $360 per contract available on the NQ. That's the Concierge Trade Alert from last night. Gold. What was the trade alert last night for gold? Oh, it never triggered. That's why it's not there. And bonds. I'm sure bonds always get stuffed out. I don't even know why I mess with them, but I do. Okay. 138, yep, caught the high, 138.24, and no trigger on the short side yet, 138.01. Let's see, the only thing we didn't look at was soybeans. Might as well do that. Go to a good word for the day. And again, any questions, put them in the chat box so that I can answer them for you. All right, on soybeans, we said to consider buying 8.94, which we never reached. And on the flip side, haven't reached that either. So this is scaled big, but it's been a relatively tame session by comparison. I mean, look at that. Well, this is an inside day for sure. Actually, an inside day. No. This was an inside day. Whoa, look at that S&P. Delayed reaction, I suppose. Okay. Did the YM get a delayed reaction? Yeah. Russell? Yeah. NQ? Yeah. Right. We'll let this play out. We have active alerts on the Dow and the S&P. Not triggered yet. I didn't want to get caught up in the noise of the announcement. I just want to be a part of the direction the market takes when it settles down. And that's what we'll do our best to do. Good word for the day. Be strong, be resilient. Sometimes it's hard, huh? Isaiah 54:2. It says, lengthen your cords, strengthen your stakes. Isaiah 54:2. The Golden Gate Bridge in San Francisco can move up to 6 meters in either direction at its center. All of its parts, including its concrete roadway, steel railings, cross beams, are connected from one welded joint to another through the vast cable system to 2 great towers, then down to a rock foundation beneath the Pacific. Now, here's 2 important biblical truths that we learn from this. Number 1, Paul writes, you must be strong. He said, be strong not in yourselves, but in the Lord, and the power of his boundless resource. Put on God's complete armor so that you can successfully resist all of the devil's methods of attack. For our fight is not against any physical enemy. It is against organizations and powers that are spiritual. We are up against the unseen power that controls this dark world and spiritual agents from the very headquarters of evil. Now therefore, you must wear the whole armor of God, that you may be able to resist evil in its day. If fought to a standstill, you may still stand your ground. Ephesians 6:10. Translation ESV may not sound like what you're accustomed to, but I think it's a pretty fair translation. So 2 things. You must be strong. That was number 1. Number 2 is you must be resilient. Now, our analogy is to the Golden Gate Bridge. If you've never been there, never seen it, never driven across it, you should. You should. Number 2, the Golden Gate Bridge has survived a century of earthquakes because it was built to sway, just not too far. It's flexible and resilient, and that's how we need to be. Paul wrote to the church at Corinth, we often suffer, but we are never crushed. Even when we don't know what to do, we never give up. In times of trouble, God is with us. And when we are knocked down, we get up again. Period. 2 Corinthians 4, 8 through 9. And that's our good word for the day. Okay, we covered, yes, we covered all of the Concierge Trade Alerts. And last night, let me roll back a spot or two. The L2 last night, I'm just looking to see exactly what we did. A lot of stuff. All right. We did have a Dow trade. We were looking to buy 25,835. It ran up just a couple of points higher. Stopped us out. We had a Russell with no trigger. And then we had a Crude. That's the one we were looking at on the screen just a moment ago. $2,400 racked up so far. The NQ, we were looking to, okay, something has happened to my, come on, it just won't do it. Oh. I might have to shut it down if I can't get it to move. There it goes, it moved. Yeah. All right. So the NQ, 7370 to 7380 to 7400. That was a no trigger. And as a no trigger, if that was the case, then that should not be that. It in fact should be sleepy time. Okay, I've already looked at that chart. We had another no trigger. Let's see, on the S&P, selling 2811 and then trailing 27 points. Swing low was 2783 and a quarter. And on the Dow, we reached the first target, but we were 11 shy of the final 105 point target. On the Russell, we reached the final target plus an extra 10 points. On the NQ, we reached the final target. Swing low was 72.22. $1,560 per contract is what the market made available. We never get out of the swing high or swing low. When you trail a stop, you know you're going to leave something on the table. And then we had an NQ from a day or two ago that hadn't been recapped that reached its target, and we had a bond alert that got stopped out. Why am I not surprised? A few days ago. And that's it. It's been, compared to last week, it's been relatively quiet. The results have been great. No complaints there. Just kind of quiet. So that's gonna do it. I think I've read through all the comments here, and I don't see another question. If there's a question, copy and paste it into the chat box real quick. If not, I gotta go to work because we got stuff. You got a question, Don? Go ahead. if you have a question, copy and paste. I see you made several comments, which I read through. And I asked at the beginning of the show, the Wildwood Weed, that was the Wildwood song by Jim Stafford. And it is, and yes, it is about weed. Thank you, Gary. Okay. Don, what's the difference between a passport holder and a partner? A partner goes through our 90-day mentoring program. A partner has access to the live training room every day, the members area of the website, workshops on Thursday night. At the end of the 90-day mentoring program, they can stay on as an active partner if they like. Most do, and they own the indicator set for life. Passport holders have access to everything CFRN. That includes Concierge Trade Alerts. That includes Logic 247. That includes weekly trading zones. That includes the indicator set. Every meeting, every thought, every idea, every product today and tomorrow. So anything from the past, anything we're doing now, and anything we should do in the future, whatever the future brings. It's a all access, backstage pass to everything CFRN. So that's the difference. Now you know. And if you want to know more, go to Emini Trading System.com. I was going to wait until I had the sound file uploaded, but that's all right. If you want to go there, you can. Emini Trading System.com. If you have any questions, hit me up on the Telegram at CFRN1. Email support at CFRN.net. I'll be here. Look forward to talking to y'all. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.